Hey everyone, welcome back to Corporate Decoder, the place where we decode the real story behind the corporate world news. Today we are diving into EVOKE Pharma Inc.'s latest report for the third quarter of 2025. And let me tell you, it is a wild ride filled with some big surprises and even bigger uncertainties. Stick around because we are about to break it all down. First off, we have EVOKE Pharma Inc. filing their quarterly report. This report basically gives us a snapshot of the company's financial health over the last 3 months. What we see here is a company navigating a complex landscape with a single product on the market for a very specific medical condition. Let us jump straight into the balance sheet. As of the 30th of September 2025, EVOKE Pharma had about $11.6 million in cash and cash equivalents. That might sound like a lot, but when you look at their liabilities, things get a bit more interesting. Their total liabilities are a hefty $12.3 million. This means their current cash on hand is barely enough to cover their immediate debts. Now, for the revenue, they reported net product sales of around $4.3 million for the third quarter of 2025. This is a 61% increase compared to the same period last year, which is fantastic news. They are selling more of their product Gimoti, which treats a condition called diabetic gastroparesis. This means more patients are getting their hands on this nasal spray. But here is where it gets tricky. While sales are up, so are expenses. Selling general and administrative expenses jumped by 39% to about $5.3 million in the quarter. A big chunk of that increase is tied to marketing efforts and payments to their partner Evosana. It is like they are pouring more fuel on the fire to keep those sales growing. And that brings us to the bottom line. For the 3 months ending the 30th of September 2025, the company reported a loss from operations of over $1.1 million. It is a slight improvement from the same period last year, but it still means they are spending more money than they are making. Looking at stockholders' equity, it is a bit of a mixed bag. While they did see some increases from warrant exercises and stock purchases, the accumulated deficit continues to grow, now sitting at over $132 million. This shows the long road EVOKE Pharma has been on to get this product to market and gain traction. When we look at the cash flow statement for the first 9 months of the year, things become clearer. They used about $2.1 million in operating activities. On the flip side, cash provided by financing activities was only about $64,000 in 2025, a massive drop from over $10.8 million in 2024. This signifies a significant slowdown in their ability to raise new funds through external financing. Now, here comes the most critical part. The company itself admits there is substantial doubt about its ability to continue as a going concern. For 1 year after these financial statements are issued. This is a huge red flag. It means they are concerned they might not have enough money to keep the lights on over the next year, especially if their partner Evosana decides to terminate their agreement. If that happens, EVOKE Pharma would have to repay a $7.5 million loan very quickly and would need to build their own commercial infrastructure from scratch, which would be incredibly expensive. And what do you know, as a potential lifeline, on the 3rd of November 2025, EVOKE Pharma announced a merger agreement with Call Medical LLC. Under this deal, Call Medical will launch a tender offer to buy all of EVOKE Pharma's shares for $11 in cash per share. This could be the exit strategy for current shareholders and a new chapter for Gimoti. The deal is expected to close in the 4th quarter of 2025. This clearly shows the company is looking for a way out of its financial struggles or a way to fund further development through a larger entity. But as with any merger, there are risks. The deal might not go through. If it falls apart, EVOKE Pharma could face significant financial penalties and negative publicity. Plus, while this merger is pending, the company faces restrictions on its business activities, potentially hindering its ability to operate effectively or pursue other opportunities. On a more positive note, the company highlights that key opinion leaders are presenting data supporting Gimoti's safety profile and efficacy. Recent data even suggests a lower incidence of tardive dyskinesia, a serious side effect associated with similar drugs than previously thought. Also, real-world evidence shows patients on Gimoti had fewer doctor visits and hospitalizations compared to those on oral metoclopramide, suggesting potential cost savings for patients and payers. These are important points as they try to prove the value of their product in a competitive market. Let us look at the 9-month period compared to last year. Net product sales are up by about $4.2 million, a solid 60% increase. This continued growth in sales is attributed to expanded pharmacy networks and more prescribers adopting Gimoti. However, selling, general and administrative expenses also went up significantly by 38%. This includes higher marketing costs and Evosana's profit sharing, directly correlating with the sales increase. So while they are selling more, they are also spending more to do so. The cash flow for the 9 months shows a massive difference. In 2024, they brought in over $10.8 million from financing activities, mostly from stock and warrant sales. But in 2025, that number plummeted to just about $64,000. This massive drop indicates a significant challenge in fundraising. Looking at the leadership, it seems like the impending merger has prompted some employment agreement updates for key executives like Matthew J. Donofrio, Mark Kowiecki, and Marilyn R. Carlson. These agreements likely outline their roles and compensation post-merger, which is standard practice when a company is being acquired. So, what is the story here? EVOKE Pharma seems to be on a path of growth with their product sales increasing, which is undeniably positive. However, their operational losses and the looming threat of Eversana terminating their agreement cast a dark shadow of uncertainty. The proposed merger with Core Medical could be a saving grace, offering shareholders a cash payout and a potential future for Gamoti under new ownership. The key takeaway for investors is the very real possibility that the company might not survive on its own, making the merger deal incredibly important for its survival. The growth in global salt sales is positive, but the company is still burning through cash and faces significant risks. Alright, that is our breakdown of EVOKE Pharma's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Do not forget to check out the Discord in the description. Thanks for watching, see you next time.